Alright, so today being day 13, I'll be covering on these reversal patterns. I have quite a good number of them here. And these actually, if you notice the names that I've given to these patterns, and let's say you had some time and you went back on, let's say, YouTube or TikTok or any other source that you can get these reversal patterns, I want to believe that you can already spot some, but the names I'm using probably they're not the same as the ones that you find out on your sources. Alright, so I'll be covering them because these are the ones that occur more frequently, and so yeah, of course, they'll be the ones that are more effective. And so, without wasting any time, let me dive into them. And the first one is the long week rejection. I know on your checks on YouTube or any other source, I know when you see this kind of a candle, I know the name was either a hammer, or for this case obviously it will be an inverted hammer, but in this case I have just said long week rejection. So, and also I believe you learned about the different names, but the names are not like crucial to know. Like, it's not a must for you to actually master those names or remember all those names. It's just you getting to know the psychology behind that candle. So right here we can clearly see it. And by the way, when you see a reversal, just know that there's a zone that is triggered here, because the candle formations are the early and leading sign of what buyers and sellers are doing right now in the market, which allows us to anticipate their next moves. However, these patterns alone may not make much sense without additional confirmations, and that's where the key levels and liquidity levels apply. So when you see like a reversal after the pattern, just know that there is some kind of zone here. Yeah, so let me change this opacity. Of course, the opacity was high while I was making these diagrams. So when you see like a reversal, just know that there is a zone that price has mitigated, so that yeah, price can reverse, or maybe it has interacted with some liquidity level. Maybe it has grabbed the liquidity level and it's now looking forward to make that potential reversal. So right here we can clearly see that yeah, now this key area can be anything. For smart money traders, I know most of you, like not most of you, but I'm not anticipating that you guys are using like the FPGs for reversals or breaker blocks, mitigation blocks for reversals. We only use the order flows and the order blocks. So in this case, I will only be like, in this case, when I say a key area, just know that it's either an order block or an order flow, because we'll be taking direct entries based on them. And that's the reason as to why we learn these reversal patterns, because on the previous part where we covered about the entry modules, I said that we will be looking for these entry opportunities by using these reversal patterns. So right here on the first reversal pattern, I named it like long week rejection. We can clearly see that price is like moving down towards this zone. So this zone can either be the decisional order flow order block or extreme order flow order block. Just know that when I say a key area, I'm referring to that. So price is heading towards the zone, and you can clearly see it's printing red bearish candles, signifying that the sellers are the ones that we are dominating, as price was heading towards the key area. And then we can clearly see that price rejected now the downward prices and formed this candle. You can clearly see that this candle has a small body, a small wick at the top, and a long wick at the bottom. This long wick showcases some buying pressure, that once price achieved, or once price got into the or tapped the zone, there was some buying pressure that, yeah, some buying pressure that caused this price to move up. Like you can see this rejection, signifying that price is now not interested with the low prices, I mean the low prices, and is looking forward for the higher prices. So this signifies some buying pressure, and price, you can clearly see it closed bullish. In this case, this is a very strong rejection because price closed bullish after the buying pressure. In this case, right, price also closed. In this case, now this is a bullish scenario. This is a bullish scenario. This is a bearish scenario. You can clearly see this here is a bearish key area, meaning price will mitigate it and make that reversal. So price was approaching the zone, and you can clearly see also the body size of these candles we are shrinking, signifying that there is some loss in buying momentum. Then once price mitigated the zone, you can clearly see it rejected the higher prices, signifying that price is now interested for the lower prices. And since this is a demand zone, then price will make that. So now we just need to identify that momentum that will now give us the confirmation for the possible reversal, so that now we can now participate into the movement. So this momentum is now the one that will give us that sign that price is now moving down. All right, so right here we can clearly see that price has mitigated the zone, and this here is a long wick rejecting the higher prices, and this color of this candle that forms this long wick, and with a small body size, this and also this this wick is smaller than the one that price created on rejecting the higher prices. You can see the long wick signifying like strong selling pressure. This color of this body, I mean the candle does not matter if it's bearish or bullish, but the psychology behind it will give you now the message or the momentum, the strength of the momentum. In this case, price closed bullish and it was rejecting the low prices. So this means this momentum was very high. In this case, price closed bullish but was rejecting the higher prices. So in this case, this means the momentum, yes, there is some selling pressure that was introduced, but the momentum is less. Like it's not that big compared to when this candle was bearish. If this candle closed bearish, this means that this selling momentum was very strong. So in this case, then if you were to take the entry, in this case, yeah, you can do that and take the entry from there. Stop loss, of course, below the candlestick, and obviously target the external whatever. But in this scenario, I wouldn't recommend you, like in this other scenario, I wouldn't recommend you to place the entry after this closure of this bullish candle. If this candle closed bearish, at least that will give you that confidence, or that will give us a signal of some momentum to the downside. So this means that in this scenario, we'll have to wait for another candle, so that now, yeah, another candle that now is signifying, or it's actually aligning with the selling pressure or the selling momentum after interacting with the key area. Of course, stop loss above the pattern, and obviously targeting that external liquidity. So that's the long wick rejection. I know on your learning you found out that this this pattern or this candle is called a hammer, and this one here is called an inverted hammer. All right. I don't know about the colors, how the names were given for the colors, but in this case, I've just generalized everything and called it a long wick rejection. And I said the color of the candle does not matter. Bullish or bearish, it does not matter. What matters is check the momentum, of course, will give you the color will give you the momentum, but the message is actually the same. Right, so onto multiple rejection. It's not something like it's not far from this first one. It's just that now here price was approaching the key area, but now, like, all right, let me put it this way. You can see price rejected the first time, rejected again the lower prices the second time, again the third time, before actually making this move. So this means that the fight between the buyers and sellers was very intense in this case, but then the buyers won. So these multiple rejections signified that price was like the selling momentum. The price was interested to pushing down, but the buyer's strength overweighed the sellers, and you can see price ultimately made this. So in this case, I wouldn't recommend you to just place the the the, the entry like directly from after seeing like such a pattern. I say the entry should not be taken when price closes, like in this case, and in this case you can see price closed bullish, so this means you can take your entry like directly from there. But in this case I wouldn't recommend until you see price gives us a clear move to the upside, because the fight between the sellers and it's not decided, because the price is just printing wicks in that area, and not until price now gives a clear sign, that's when now you take that entry. And now in this case you need to see a candle with a good body size rejecting from that area, and that candle should be going onto your favor. And that's when now you can see this bullish candle. After that, of course, you'll be placing your sell below these long wicks, and then yeah, do that. Of course, in this now this is a bearish scenario of the case. You can see price is rejecting like this. I know most of you guys will place the entry here just because I said the long wick rejection. Of course, this here is a strong a strong inverted hammer, or a strong long wick rejection, because it closed bearish and it was mitigating a bearish key area. But in this case, I will just recommend not to do this, because the price is still printing like these multiple weeks, and the fight between the buyers and the sellers is not decided, and so you will need to wait for price to give a clear sign out of the zone. So in this case now you will take your entry after this closure of this candle, because this candle now says that the sellers have won. The fight between the sellers and the buyers, the sellers won. So in this case, then you can take your entry from here. Now this is different from this case, because this case it was just one candle, but in this case it was multiple. So even though also in this long wick rejection, I will also be recommending that I know most of you would want a good risk to reward, but also it's good to make sure that price have rejected. Even after seeing this long wick, I would recommend you to wait for another candle that will decide, or will give you a clear, or will give you the confidence that now the buyers have taken control and you can now participate into the market, or you can now take the trade. So yeah, you can see the difference from these ones. In fact, let me put it clear. Even though the color does not matter, and also the color showcases the momentum, in this case they said the momentum will be less because price is rejecting the higher prices, and in this case the momentum or the reversal is strong because price was rejecting the low prices and it closed bullish, and I said you can take the entry from here. All right, in that case now, all right, if this was a sweep, or a liquidity level, that will be a great entry. But if it was a key area, then I would recommend you to wait for price to decide, because price may create some multiple dodges here, showcasing some indecision, because there might be some introduction of the buyers here, but the sellers might won, because let's say this is a decisional zone. So we say the decisional, like it's 50-50. Price may respect it or not. So in that case, I would recommend you to wait for a clear sign, not until it is an extreme mitigation or extreme pure mitigation. Now that will make sense. But if it's a decision, I would just wait for a candle with good momentum and to my favor for me to take that entry. All right, and to the momentum candles, this is just explaining itself. Once price, of course, price has mitigated a key area and it's rejecting with candles that are increasing in size. So in this case, you can see the candle, this one here, small body size, but the next one had a big body size, and you can clearly see also it had no wick on top, meaning now the buying momentum was there until the end of the candle, showcasing that this here is the buyers are in complete control and you can now participate since price has interacted with that key area. I said that these patterns alone may not make much sense without additional confirmations, and that's where now our key areas and liquidity levels apply. I know these reversal patterns may apply anywhere on the market, but first make sure that you're interacting with key areas and liquidity levels before we actually make a move out of them. So in this case, if price has interacted with the key area and it's rejecting with this case, you can see a small body size, and of course the bigger the size, the bigger the momentum. So small body size, and then the other candle that was following is of big momentum, or big size showcasing big momentum, and hence an ultimate move or a possible ultimate move onto the anticipated direction. So in this case, once you see that pattern, you can now take your entry on the closure of this candle and then obviously target where you need to target or where you should target. And in this case also, you can see this is the bearish scenario of the case. Price mitigated that demand zone or mitigated that bearish order block or order flow or whatever, and then you can see a small body size. Then you need to wait for like let's say now price printed this and you still have got no confidence to participate because the momentum is less. Then price prints this candle with big body size showcasing now great momentum or showcasing strong momentum to the downside. Then that's when now on the closure of this candle you will take your entry and obviously to the bearish side. All right, so that's the momentum candles. I know there are names to these patterns that we are given like specifically, but I'm just showcasing the psychology behind what they actually mean and stuff. So these are the shrinking candles. I want to believe that you all know what I'm actually saying here. You can clearly see price is heading towards the demand zone, and this body size of this candle compared to this, you can see this, the one that was the next candle is not of or is of small body size to this, the one that was the initial one. I mean, so you can see this one here, the body size is a little bit big, this one is a little bit small, a little bit small, and it keeps on reducing. The body size keeps on reducing as price is approaching the demand zone. So this showcases a reduction in the buying momentum. It showcases that there is some introduction of the sellers or the buyers are losing momentum as price is approaching this zone. So in this case, of course, there is some reduction in the selling momentum, but we don't like just sell after price has mitigated the zone because there is some this reduction. We still need to see some confirmation from it. Let's say you wait for like a long rejection week, so you can see like this. After seeing that, now you can take the entry, or maybe some multiple rejections here, multiple long rejection, or maybe you can wait for a candle like this, a momentum candle. After price has mitigated this, you may need to wait for a candle that has a good momentum compared to like the one that will give you a good confidence that price is indeed going down because of its body size showcasing the rejection is indeed, or there is some possibility that price may eventually make that ultimate reversal. So the same to this other one, you can see price rejecting the demand zone as price was approaching the demand zone. I mean, this is a supply zone, this is a demand zone. So as price is approaching the demand zone, you can clearly see the body size of this bearish candle compared to this. This is of small body size, and this is of course bigger than this one. This one here is smaller than this, and this is of course smaller than this. So these candles are what we call the shrinking candles, showcasing that the selling momentum is reducing or it keeps on decreasing as price is approaching the demand zone. And so that's where now you wait for another confirmation, probably a long week rejection or the ones that I'll be showcasing here down. And here, yeah, this one. This is where now these other ones come into play. You can see this one here, engulfing patterns, where price, all right, let me draw the key area exactly right here. You can see price has been okay. This candle, this body size compared to this is of big body size and this is of small body size. So this means shrinking candle. And then this candle, you can see engulfed this previous small body sized bearish candle, and this is what we call an engulfing pattern. And in this case, it's what we call the bullish engulfing pattern because it is signifying a possible bullish momentum. By bullish engulfing, or by engulfing, I mean you can see the wick of this other candle or the candle that came before this big bullish candle. The low of the wick, you can see this candle like took out the liquidity or took out the previous candle low, and also you can see it broke past the previous candle high, so it completely engulfed this candle. Same into this other scenario, price completely engulfed this bullish candle. And by the way, if you have noticed, in this case the color matters. In this case, this here was a bullish candle, I mean bearish candle, and this other one that engulfed that bearish candle is a bullish candle. In this case, this is a bullish candle, and the one that engulfed this bullish candle is a bearish candle. You can see this candle, both the high and the low, they are completely engulfed inside this bearish candle. This bearish candle wick took out the high of this previous candle high and also broke past the previous candle low. So this is what we call the bearish engulfing. So once you see this pattern, this is a strong sign that price is actually, or this is a possible reversal sign that price may end up going deeper and deeper into the anticipated direction. So once you see such pattern where price is shrinking, like the shrinking candles, and then you see this engulfing pattern, I mean, that's when now you take the entry, because that's a strong entry. Or if you see the momentum candle, let's say price prints some bearish candle here, but of small body size, and then the following it's of big body size, then that showcases some selling momentum. Then that's when you take it, and this will be the opposite on this other scenario. Price prints a bullish candle here because you can see the selling momentum keeps on reducing, and of course it will of course end up until there is no any, like, the selling momentum is completely neutral, and price prints some positive candle here, or like a bullish candle here, and then that bullish candle may be of small body size, and then the one that comes next becomes of big body size compared to the bullish one that was created before. In that case, that's a momentum candle, and that's also a shrinking. So there is some first confirmation, the shrinking in buying momentum, and then momentum candle showcasing a possible reversal. And then finally we have these ones, which we call the morning and the evening star. Probably you have seen these a lot. So the morning and the evening star patterns. So exactly right here, you can see price created this bullish candle. Then the next one is of small body size. So this means that's shrinking candle, and then the next candle, in this case, it is of big body size compared to this. This is different to this one here, because in this case, you can see the wick like did it engulfed. This, if it does that, then that will be an engulfing pattern. And also in this case, you can clearly see here, this candle can be any candle, but in this morning star and evening star, it should be strictly be a doji candle. A doji candle a doji candle is like a candle with the length of the wicks are equal or slightly equal, showcasing some doji whatever there, because a doji is simply a candle that showcases indecision, meaning the buying momentum and the selling momentum is neutral, or the buying momentum and the selling momentum is equilibrium, like it's the same or it's equal. So once price, so you can see the selling momentum, then the indecision candle. So the selling candle was showcasing some domination of sellers, and then this doji candle showcases that buyers, like there is some introduction of buyers into the market, and these buyers, like the fight between the buyers and the sellers, it's now like neutral, and now we cannot like decide to take that buy if price does not give us a sign that the buyers have taken control, they're the ones that are dominating. And so that's what we need, because this is actually an indecision. The selling momentum and the buying momentum is equal, so we cannot take the entry after the closure of this indecision candle. So we'll need, and this indecision candle, by the way, it can be of any other color, like the color does not matter. It can be bearish or bullish, the color does not matter. And then the next candle, of course the bullish candle, needs to close, of course, with good momentum. And this is where now you measure the momentum of this thing. Like you take your fib tool, and drag it from the body size of that bearish candle to like from the top and bottom of that candle. All right, I want to get rid of some things here, and of course the background. Well, let me leave the background. Let me remove these levels. Yeah, I think that will be good. Exactly. So you can see this one here. So this candle closed above the 50% of this red candle. I mean, it closed above the equilibrium, not equilibrium, but let me say like if it was a fair value gap, I would say the consequent encroachment. But in this case, I would just say the 50% of this body candle. So once price closes past that, then once this candle closes past the 50% of this bearish candle body, then in that case, I would say that this morning star is complete. And this candle needs to be a doji, and I said the color does not matter. So in this case, now it will be completely the opposite. You can see price creates this big bullish candle, signifying that the buyers were the ones dominating. Then the doji candle, the doji can be of any color, meaning it can be bearish or bullish. And then we say the doji shows or signifies that the selling momentum or the selling pressure and the buying pressure is relatively equal, and then we'll need now to see a candle of good momentum showcasing that a party won. So in that case, for us to participate, we need to make sure that the ones that won are the ones that like if this is a bearish order block, then we will need to see a bearish candle, meaning the sellers need to win so that we take this entry. But if price now prints a bullish candle that breaks past this or whatever it may close inside there, I will not take the entry until I see a candle that is actually giving the possibility of a reversal for me to actually participate into the trade. So guys, these are just these are the candles that they appear more frequently. I mean, the psychologicalness of this thing will give you like what you need so that you can see any scenario that is happening on once price mitigates the area. You can actually see, especially the shrinking candles, the momentum candles, the engulfing patterns, the morning star, the evening star, the long wick rejection, the multiple wick rejection. These are scenarios that occur more frequently, and this will remove the need for you to master those reversal patterns that probably you went to YouTube and learned. Like I know the harami, the dark cloud cover, the piercing line. I know most of those names, the shooting star, the inverted hammer, the hammer. Like the names are not like they do not matter. Just get to know the psychologicalness of this thing, and I've just showcased something that will give you a head on that you don't even need to master these names. Just know the how to read price, how price is actually reacting as price is approaching that zone, and how price is rejecting from that zone. Then that will give you a clear sign of you of either to enter or to participate into that trade and all of that. So these reversal patterns should work in hand with the key areas. You should not see this reversal pattern and think that this is a re-entry and you participate into the trade. I wouldn't recommend. Make sure that you're taking this from the key area or after the grab of the liquidity level, because they work hand in hand with the because price may create this reversal pattern and then eventually disobey it. So to decrease the chances of that happening, that's when now the key areas and liquidity levels actually come in play. So I've made it easy because there is no need for you to actually cram all those reversal patterns that there is. And if you actually master the psychology behind these ones, because these are the ones that occur more frequently. You don't need to master the names, but you can also do that. It's actually good for these ones that I've actually showcased. And so right now, Yeah, I think I have done my best to explain these in the simplest way possible. And right now, I'm actually open for any questions.